Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Just was reading a strange article. Credit Suisse sales of securitized products will not correct deeper cultural problems reminiscent of the 2008 meltdown. I guess they want to do collateralized debt obligations again, spread the risk, and then watch them, and then lend it to them twice. I don't know. I didn't go deeper into the article. But it's a surprise that anybody even thinks that way anymore. But obviously they do. And then you put this FTX situation, the wallet slash product. I don't know what you want to call it exactly. So it's not the cryptos were the problem. It's the people who are holding on to the cryptos. And I thought the idea was to have your own crypto in your own pocket. In other words, why do you park it somewhere like a car in a garage and then not expect somebody to possibly break into your automobile since you're giving them the opportunity? I'm confused by all that. And the good thing, I guess you could say, for those and myself who support the idea that cryptos are just a flip side of the central banks. So, I find them as a different asset class. That's it. And, what you're seeing now with the cryptos. Oh, let's put the chat line up too, because I'm looking to see if there's anybody there, and I'm not even seeing it. But the problem more than anything else is that now there's talk. Now that the Republicans, hey, there's Janos. Hey, Janos, and there's Metho 2000. There's George. Cool. Some bodies are rolling in. Robin was saying to me yesterday, Janos, about what you had said about there wasn't going to be that many new people on there live because of something not connected. So Robin wanted to understand that better because he's always trying to figure a way for us to have more viewers, which sounds good to me. More questions, which sounds good to me. But that FTX, one thing is for sure, it's not hurting Bitcoin, which is kind of interesting. It's definitely not hurting Bitcoin. So let's see. Let's put the currencies up there this morning on the screen. What do we got here? That's the wrong screen. Oh, you know what? Let's just put the euro up there for the moment. We'll stick that up there. No, I don't want to change it. There's the euro right there. So you see the euro down just a little bit. Now let's go over to J4X, and we have the euro up there too at the same time. And then we'll go take a look at the dollar index. You see the strength in both of them. Both in weekly trends, as we've shown you before. We'll just, that's the weekly trend right there for the euro, and then there is the daily trend for the euro on J4X. Lots of strength. You can see the fast and slow moving stochastic has changed its story a while ago. Back in here, it was giving us problems. It's not problems, but it was telling us that it was topping out. And it has to some extent. When you look at it over on Chicago Quant there, you can see it's been pretty much sideways. They put new highs in or something like that, but nothing major. And it's slowly melting down here on our algo right there. But that's the FTX. That Sam Fried, whatever goofy name is, that was running this thing and then running a hedge fund at the same time, and obviously using the hedge fund to prop up things. I don't know. Trying to just buy the bloody things. Park them into your wallet. And why do you need to have a hedge fund to prop up at it? 90 some odd percent, I understand, leverage he was using. So, he was inflating his value for someone who keeps on walking around saying, I don't want to be rich, I don't want to be rich. And he's at the same time illegally inflating his value. That's the whole problem in a lot of these industries. And if we only had some decent people in the protective structure, like the CFTC or the Securities Exchange here in the United States, actually being responsible, it sounds like they're going to have some problems too there, because it sounds like he's been buying influence, and they've been glad to give it to him. And at the same time, now I'm hearing something insane. There was money used going to Ukraine from the U.S. Congress to buy FTX, which is, and I'm not saying this is speculation. They have an audit trail of it, and that's going to start to come out. And it's just like, you just kind of shake your head to all this. It's like that's what's so nice about That's what destroyed listed options in the 1840s, in the 1830s, and that's why they outlawed them. It had to be an over-the-counter market. It couldn't be something justified at an exchange anymore. Because you put it on an exchange, people think it's protected, it's real. You know. In this case here, now Coinbase is sanctioned by the Securities Exchange Commission, monitored by the Securities Exchange Commission, whereas this FTX was not, and they were trying to get that into a position to be that way. That's exactly why he was buying influence, and it looked a lot like Madoff. The big fraud situation that the chairman of the Nasdaq, trader, the exchange, the biggest exchange in the world, the Nasdaq, he was running a fund that was his name was Bernie Madoff, and he passed on in prison now, but he's dead now. But in the end result is that they kept on trying to figure out why he was making money. I investigated it for my hedge fund. It took me about a minute and a half. They gave me 2 days to figure it out. It took me a minute and a half to see the strategy. I told them what it was, and they said, okay, now forget what we asked you. And I said, well, call the Securities Exchange Commission. They said, oh, no, we don't want to be a part of anything. And so, good people turned a blind eye to it. When I complained to them, they could care less. So, this is the same thing, same crazy, but now it taints the crypto universe. And then I see this strange article that, was it, let me go back to that again. Then I see the same thing again. Someone trying, one of the major clean banks, Credit Suisse, thinking that they can go and do the collateralized debt obligation products. I guess that's what they're talking about. Plans to sell off a bulk of securitized assets to Apollo Global Management next year. Is expected to usher in a new phase of the bank's reorganization and help it focus from high risk to more traditional areas. But the absence of changes to the internal culture, Credit Suisse may go down the path of failed financial institutions and trigger massive regulatory intervention, not unlike what happened in 2008 with the fall of Lehman Brothers. So it's just another game. Now, some people out there may be seeing this tomorrow or in the YouTube and wonder what we're talking about, since 2008 was a collapse of the financial system across the planet, and most of the media likes to hide that, and they like to pretend that there's no problem. But most of the major institutions, brokerage-wise and banking, went out of business, and insurance. Lloyd's of London went bankrupt also. It still exists, but it's owned by the Exchequer, just like Citibank is owned by the Federal Reserve. Deutsche Bank is owned by the government, the Federal Republic of Germany, so forth and so on. We could go on and on and on. And so they make it a pretend thing, these politicians, to hide the benefits that they managed from it. And then they created QE, which was fine for a year or two, but it's not fine. Here it is, the year 2022, getting ready to go to 2023, and we've been in QE now since the middle, or right around, the election of Mr. Obama. We've been in QE. So at the end of Mr. Bush's, literally end of his presidency. And he complained about it for 3 years. I used to show videos of it. He kept on asking the Congress to stop this stuff. It's going to bankrupt the world, blah, 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 blah. And no one listens, and no one talks about it now. I talk about it, and it's all fact. In other words, no one here who hears what I'm saying can prove it wrong. They can tell you that CNN won't talk about it, or the New York Times won't talk about it, or the Telegraph, or the Telegraph used to talk about it, but it's stopped. And the Financial Times won't talk about it. They just kind of dance around it. But that's the fact of life. So it's a fact. And now we have another major institution trying to find its way out of its problems like that. All right, let's just go back to the most successful math on the planet as far as I know. If anybody can find better, please tell me. I'd like to use it. And here it is there. We're looking at the J4X. I have developed a simple system for that with public technical analysis, and then we have the Chicago Quant Technologies math right here on the right side, showing the success of the technique we've developed for J4X. So it correlates to our math about 67 to 68% of the time, which is a pretty high percentage. Our success rate on Chicago Quant overall is close to 90%. So almost 9 out of 10 trades will win. 8 out of 9, that type of thing, or 8 out of 10. It's usually 8.5 something. That's the success rate for the last 42 years. And so we're really fact-based here. We're not really big on fantasy. And you can go back and look at our YouTubes, and you'll see our math has been successful year after year after year. All right, let's get rolling along. There is the euro, but let's jump back. We like to start off normally looking at the dollar index itself. We're a big fan of seeing it go down from the dollar. We don't, the dollar's way too strong. And let's put it over here on Chicago Quant. No, that's not the right place. There's the right place. And did I make any sense there, Metho? Or was I just, am I out there, flying? Or am I being crazy as usual? What do you think? Was I crazy? Am I crazy or am I fact-based? I just got on a rampage there because I can't believe someone's trying to do the CDOs again. And at the same time, I found out this morning that the Congress has been giving money to FTX has put in $40 million into political contributions, and somehow or another, Ukrainian money has found a way to be invested into the FTX. And I'm like, what? Are you kidding me? Everybody's a little bit crazy? Good. Okay, so that's a good thing, right? Okay. And everything I said, did it make any sense? Am I making any sense, or am I off course? And there's the dollar index. We'll talk dollar index. That's interesting this morning. You see the dollar index trying to lift up a little bit. We've been in a daily sell since this topping area there. You see the little red dotted line we throw in there just to emphasize it. We will see. What will we see? That the investigations on the money going to FTX? And over here on the dollar index, you can see this is the DXY. And you can see it's been trying to roll over. Oh no, that's not the DXY. That is that oil. That is, what is that? DXY. That is the German stock index. Let's find the dollar index. Must be right next to it. There we are. And it's been rolling over like so, showing that same weakness our work is. Oh, it's starting to look like the FTX money, to a great extent, was leveraged enormously in the hedge fund. And you think he took off with it too? You think he actually stole some of it? Is the DAX crazy today? Well, Dow Jones Industrial Average is down 243. We're seeing some of the stock indices sell down a little bit. Our work was aiming in that direction. I'll take you over there real quick since we're having that conversation. There's the, we're pushing down. It showed a sell last night. There was a green dot this morning, so I just put the sell right here instead. But, it's breaking down. It was below it there. I'm not sure why we got that green dot out of it, but that's what the math said, and that's what we watched. But we're in that weekly buy, so all it's really telling us is, since we've been in the weekly buy back here in the 37.50 area, that, you should be taking some profits up in here. That's what it's really just telling you, just like the way it tried to do it here, and then the way it told you to do it here after the first, here was your buy, and then it closed in the weekly buy, and it climbed up to the 30, is that like 30, low 39s, and then we got into the sell, and it broke down a little bit, but there's not really deep selling. We'll see. I mean, that was a pretty good day right there. We'll see what they do today if we get more out of it. I would think they'd want to, I would think they would, some of the funds, it's the end of the year, they're going to want to take profits. There's no doubt about that. Was it Sam, his mother, and the others hate Bitcoin? Yeah, probably because it's a Gensler's a Republican? No, he's not. He's a Democrat. He's in the Democrat administration. And he was in the Democrat administration with Obama. He's not a Republican. He's a Democrat. Yeah, they probably hate Bitcoin, probably because it's a pretty accurate tool. I follow it. I like it. I've owned it and own it at times, more than not fully invested all the time in it or anything like that. I don't know what that word "fully invested" means. In other words, I don't always be like loaded up in it. I have a piece here or there. I've had it for a decade now. So let's look at it, and we'll look at it on Chicago J4X too. There's the front month. We've been in the sell for a couple of days here. We went into a sell here, and we also went into the sell here. It started breaking down, I guess, like right there. That was the weekend, I guess, of 2 weeks ago. And, it's been pressured ever since. Came down from the 21. What I am happy about is how it's parked itself in the 16s. We talk about it being parked in the 16s at the low end of the range, 16, 18, something like that. We kind of think it wants to float around between that area and the 24 to 25. It seems like a very solid product. What's that, Robin? Sam, yeah, yes, his name, yeah, Sammy. What a wacko job, huh? I don't know. It's starting to. The more I see, the more you scratch your head and say, for somebody that claims they don't want to be, over wealth, why are they, why were they playing shenanigans with stuff? Why couldn't they have been a good depository for people? A wallet. Why did they have to play games to try to pump up the value by having a hedge fund and then taking the investors' hedge fund money to prop up prices? That's so weird. It's like, just doesn't make any, in other words, it just screams of greed. That's what it screams of. It's just screaming of greed. Ponzi, yeah, exactly. Cover up, yeah. Yeah, and Gensler, he's a full-fledged Democrat. What was funny is when we were used to do the webinars, he used to be right after my webinar here in the States, his MIT course in cryptos. And that was, literally almost at the end of every Dukascopy webinar, when I don't always turn it off instantly. I just, and next thing I know, Gensler was up there. And then out of all that, and the end result is that once he became Securities Exchange Chairman, then all of a sudden YouTube doesn't really reflect me at all anymore. So someone must have paid attention and said, "Hey, you got this capitalist who believes in free markets right after your webinar. We got to get rid of him. Can't have that." That's all I can do is laugh at that. Okay. All right, where are we at? There's the dollar indexes. You can see that. Okay, let's go back to the euro now. Let's see what's in the euro. Where's it at? Or maybe we should just let's go to GBP. We've already looked at euro. Unless someone wants to see euro, we'll go to GBP. Let's see, Metho. What about Sam Metho? Oh yeah, let's put it over here. Right there. There it is. Now I see it. Okay. So this is still holding up, like the euro is. I think the euro is doing the same thing. Let's quick flash over there. Yeah. They're both holding up over across their daily buys still. Weekly looks fine. Doesn't look bad. Same thing over there with J4X. You can see the same thing right there. Little weakness. And it's kind of going sideways from it. But we're still in the green, so it's not telling you, that the trend has shifted that dramatically yet. And there's the weekly. So there's the weekly. Weekly's trying to break down a little bit here, and that's okay. But again, we're all green, so there's no major. Oh, Sam is a nickname. Oh, Sam Bankrupt. I like that. I didn't see it all. I like that. Bankman, Bankrupt. Sam Bankrupt Freed. Thank you. Nickname of Sam now. I like that. Sam Bankrupt Fried. It's fried, isn't it? It's not freed. It's fried. Yeah, he is fried, all right. Cover up, Robin, right? I agree. Cool. Okay, I like that. That's good. All right, now, let's see. So cable's looking fine. There's no real major shakeups going on over there. I guess the new prime minister's doing fine. I guess that's a good thing. Now, let's see. From there, we'll switch over to the Swiss. And there's the Swiss. It's trying to lift up. It closed in a daily buy yesterday, right there. But still in that weekly sell down in here. And then over here on J4X, there's the Swissy. And on the weekly, you can see it doing the same thing as Chicago Quant, downwardly trend right there. And downwardly trend right there. Same game, same so forth and so on. And then the daily, like so. There's the daily, and you can see down she goes. And the same thing over here. Make the red a little bit dark, bigger, thickerish. Where's that mousey at? There's the mousey. There we are. There we go, and you can see where the daily sell started off right there. So that pressure, and you can see that pressure, and that's where we're at. When it comes to the cable, cable's looking pretty good. I don't see any real weakness out of it at this point. You can see some profit taking. Remember, things don't go in a straight line. They have to go up, they have to go down, so forth and so on. Game over. Yeah, he's cooked. Yeah, there's no doubt about that. I guess he's incorporated in Florida. I think that's what it is. And so he's broken the Florida laws. He's going to be under indictment there. Or I think he is already indicted. And so that means that you end up going to court when you get indicted. Sip of the tea. Feels good. So from there, we'll take a look at the yen. And the yen was really close yesterday, making it into that daily buy. I like how the yen and the Swiss are starting to function the same way. And you can see here it was very close, but it was still a red dot. And then today we're getting a combination red-green, so a little volatility signal trying to kick up. And the line is through the zero line there. And then over here, you can see it on J4X right there. Yen doing the same thing, showing the weakness. And you can see the green line trying to turn up, as we see our green line turning up. Now, we do use stochastics to smooth our math out. That's why there's a good correlation. And but what the difference is that we're usually a couple hours ahead. And just a simple example of that would be like the intraday trading that we have going on over here on this page there. And it just shows you the fast dynamic of it all. When we get a volatility signal here, when we get a red dot, it's usually downward pressure. Same thing, another signal, another good short with the histogram minus, of course. Same thing here. Tells you it's good short. And then you can see as the green line breaks through the manifold, and we get a volatility signal again, and we get green dots, you can see the natural trend again is on the upside no matter what they try to do to it. And this is what is this? This is a 0.72 Tesla. That's what that is in ticks. So it's 782. The natural I guess Tesla is 396. Okay, and so then you multiply it by 3 and then bring it back down, and I think it's a 0.663 or 71, something like that. It's a Tesla, a slice of a Tesla. And then, using Fibonacci, and that's what I do there, just for the fun of it. And you can see here is a longer dated one. This is a a 2369, which is like 3 times this calculation right there. And then this is a 2/3 Tesla again, because it's a 286. And you can see the accuracy of it. You get a little green dot there. You get the strength, and that's all we're doing. Is that we always say that your weekly and your daily should match up to your intraday math. If they don't, then you need to go back and readjust it all. So, and then so we were left off at the yen. So let's go back to the yen, and you can see that volatility thing trying to kick up now, and that's the beginning of a signal of. But we are in weekly sell, so we're not exactly excited. This could hesitate for a day or two, and then gain against the dollar even more. There is some stories this morning. They're from Federal Reserve people. It's amazing how much talking they do. They just yak. But there's talk that the next increase in interest rates could be a 0.5 percentage point. We talked about this yesterday. I've been telling you, I've been hearing rumors. Now, today, they were confirmed by different Fed governors and a few Fed presidents that they think they can slow the increase. And that's why the market at first yesterday lifted up very strong and then started to fail. They started saying, but yes, they're still going to raise interest rates. And there's a real strong feeling that there's going to be a something like 5, or I guess it's 4 out of the last 5 quarters are going to be recessionary. So in other words, we've been through we're in a recession now, and it's trying to come out of the recession. But there's an opinion out there that January's first quarter and second quarter are going to go back into the minus again. So we'll have like I guess it's the second and the third quarter were minuses. Fourth quarter is trying to be a plus now, and then the next year's first and second quarters will be minuses again in recession. Now, again, the media is not telling you this. They keep on telling you we're not in a recession, but we're negative. And so negative is negative. Negative is not positive, as much as the president tries to tell you it's not decided yet. I like how he does it. He just says, well, it's not very clear that we're in a recession. And so negative can be plus without adding anything. Interesting. From there, we drift over to now the classic laboratory that we've been watching for a long, long time, and that is the dollar Turkish lira, and we look at the euro Turkish lira. You see there, still more strength. It's in a daily buy. Let's tighten it up one tick again. Can we do that? Yeah, it did it. And I guess it's those bigger ticks make it wacky, so it's better to look at it this way. And we're 41 weeks in a weekly buy. You can see the green line had drifted underneath the manifold. No negative. I mean, it has to close below this white line. And you can see even the echo, or the 5 gas line, which is the little cute dotted blue or cyan, has bounced off the negative and lifted back up again. And you can see the new highs put in, or the higher highs put in. And that's where we are. And now you got some more action here, and it's in a daily buy from here, so I guess the pressure is still on the upside, and here it's Thursday, and we've got the, excuse me, let me take a sip of water. You can see there on the weekly, on the Chicago Quant Weekly, you can see right there the green line is now lifting through the manifold, which means they're acting like they want to take it up more. It's like, what? It's like, just constantly saying to yourself, what is going on with that? But there we go, and we'll slide that in right there. There's the dollar Turkish lira. You can see it jumping. It be jumping on a daily with no problem on the upside for the last, 5 days, and then maybe even deeper. And then you can see here on the weekly, joining in with Chicago, turning up, getting some green, just a little back and fill there, I guess, we could say, how many weeks was it in the buy? 3, 4, let's see, 1, 3, that's 4, that's 5, that's 6, that's 7, that's 8. Why don't we make it the whole screen? It makes it easier to read. So it's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Then 2 weeks of red bars. You can see the line broke underneath it, and then lifting again now and breaking through here. And you can see overall, we've been in a weekly buy since here on the Chicago Quant. We have not got into a weekly sell yet. But on here, it's drifted in and out a few times. All right, and then we get back over to the daily where we started, and we'll go over to the Euro Turkish Lira, like so. And put it up on Chicago, like so. And there it is there. You can see that daily buy from this point here. And you can see the same situation. This thing's been aggressively strong. We've been showing some weakness here through the fast, slow stochastic, just like we did here, but we haven't broken down to the zero line, so no real worries there. And at the same time, it's stayed green here, so you don't take the short. You just try to figure out not to be long anymore, that's all. And if you're an institution, then you would know how to use it even better because you're used to hedging, and so you know how. This is giving you an insight of heads up how to hedge. So from there, we dive over to where do we dive over to? We go over to the CAD. We look at the two currencies that match up to commodities more than the others. And that is, there's Canadian, a second day in a daily buy, and it's still lifting up, but still in that weekly sell there. And then let's put it up over here. There's the CAD, there's the daily, and it's trying to lift up today, and you can see the green line's been saying that for 1, 2, 3, 4, 5, 6, 7. It's a bunch of days it's been trying to tell you that it's oversold, and it's now starting to lift. We're starting to get into it, and that's where we are over here. We guess let's put that in there. There we are. So we went to the buy there. All right, now, and you can see we did have a couple days of red, green, giving you a warning that we were coming into some action. I mean, it's a lot to get two red greens in a row. Get one of them, it's always like, okay, something's coming. Like when it did it here, we had a green and then a red, a daily sell. I mean, next day was a buy, and then the next day a gap up, and then a sell. And the histogram was telling us that there's weakness, not strength. And the next thing you know is it's going down in value. It's the same thing here. We get towards a daily buy, the histogram is plus, and we get a red green, and we get green, and we know a trend now is developing on the upside. And the same thing here. We're negative here in the histogram, red and green. Next day makes a new high and then sells down. And it was weak. I don't say they were slamming it, but that was weak in the Canadian. Now, from there, we'll jump over to, we're going to put up on J4X. We'll show you gold. No, not gold. I'm sorry. It's oil. It's Earl. It's Earl. There's light, sweet Texas crude. And you can see, as it goes down in value, normally, the Canadian goes up in value. And you see the last couple of days, it tried to do that. It's tried to bottom out. No, I'm sorry. Let's get this right again. Here we go. When this goes down in value, oil, usually Canadian goes up and loses money, like so. That's what that is. That's losing money against the dollar. And then you can see it's been making money against the dollar here for a bunch of months, or a couple months here, 5 weeks, 6 weeks, something like that. And then at the same time, you can see the Canadian was trying to drop, was pressured to go down, which is gaining value. That's not right. Okay, so it's gaining value from here. There's the point. This is really turning into a mess to describe. But in the end result is that when it's going down, it's gaining against the dollar over here. At the same time, we saw strength in oil there. That's the name of the game. Then it tops out, and oil, especially over the last 6 days, and you can see 1, 2, 3, 4, 5, 6 days. This is the 6th day. It starts to bottom in here and tries to start lifting, which means it's losing value, the Canadian is. Because, why? Because oil is going down. That's what that is. Now, when we look at it a little bit more, not Hinky-Ashky. Remember, Hinky-Ashkys are a open, high, low multiplied by 2 divided by 2. Multiplied, or no, Hinky-Ashky bars are an open multiplied by 2, and a high multiplied by 2, and an open multiplied by 2, and a closed multiplied by 2. And then they divide it and give you a single number out of that. And that seems redundant on a lot of levels, but that's what they're doing. And that's why you're seeing these big wide bars that don't really reflect the actual price of the action. So, you can see when you look at the number there, it has it down to 83.20. And when we go and look at crude oil, it has not done that. Let's go to crude. Right there. And that back there, it had not gotten to 83.20. Now it's down to 83.77. And what do we have the low there of? They're showing it as 83.02 at the bottom there. 83.0. Now it's at 83.26. And there it is. The low there is 83.19. So that's what's going on. You're seeing the multiplier, and you can see crude is at 83.71. So it's like 60-cent difference because it's being multiplied and then divided. Or added together, then divided. I'm sorry, added together, not multiplied. Added together and then divided. So that's what generates that. And it has a characteristic like our dots. And so it's what's really interesting is my math doesn't go in that direction. So that's fascinating. It always blows my mind. I've always found Hinky-Ashkys nice. The problem is they're a couple hours behind our math. That's the only problem. Whereas our math is live. Hinky-Ashky is an average. So it's delayed, like a couple hours. And so when we're looking at Hinky-Ashkys, when it turns red, we could have already been red and turned to green like 2 hours beforehand. But it's better than looking at something like a MACD. But trust me, I do throw the challenge out there, and I've done that since I started at Dukascopy 9 or 10 years ago. And that is that if you can find a better math, please tell me. We'll put it up on the screen and put it against our math. And believe me, if you found a better math, I'd be the first to want to use it. Because I'm here to make money. I'm not here to trade. And I don't need to have lots of trading going on. I like to make money. And so better tools would make me make better money. A little bit at least. 15. It would increase my profits by 15%. So that's not too bad. I'll take a 15% increase. Right now I have an 85% return. And that would give us 100%. I like that. I'll take that anytime. All right, where are we at now? From there, we go to the South African Rand. And I was fascinated. I saw copper yesterday and silver all closing daily sales, but gold had it survived the buy, which was, was kind of like, okay, that's cool. And there's gold. And let's find the South African Rand right there. And you can see it's doing that same bounce. So when gold is going up in value, let's do it on the screen here. When gold is going up in value, I'm a little bit better at this time since I got my practice out of Canadian. The South African Rand is gaining against the dollar and going down. So in other words, it makes money. There's less Rand to a dollar, so it's making money. And so as we did that yesterday on, I think it was Turkish lira, we started off for some reason back when it was at 1 or 1.5, and now it's trading at basically 19. And trying to emphasize the fact that it's in hyper inflation. It's really exploded. I mean, it's not like it's doubled or tripled. It's sequestral. I don't know, one of those crazy math things. So it went from 1 to 2. That's 100% inflation, and then from 2 to 4. Looking back at the 1, that's 4 times inflation. 4 times, not like 4%. 4 times. That's hyperinflation. Then it goes from 4 to 8. And then, you look at that and you go, wow, wait a minute. So the product was trading at 1, now it's trading at 8. That's a, what do you call it? I can see it. It's like eight sixthel or something like that, I think they call it. So now you've got it 8 times of inflation. Not 8%, 8 times. That's like, whoa. Now we're at 19. I don't even want to play with those numbers and words. Forget it. It's beyond hyper. It's hyper squared. And so you can see here the gold is trying to put in. It's got a red going on with it today. You can see the green line is breaking underneath. We're seeing some of that weakness there, and at the same time, you can see the South African rand making its inch up. Now what we'll do is we'll throw the South African rand on Chicago J4X right there. You see the green developing, and you see the green line moving up. So it's losing value against the dollar, or gold, I'm sorry. Yeah, it's losing value against the dollar, and that means gold must be going down. And we'll put that on over here. And there it is right there. And you see the same situation. It was very close yesterday getting into the sell right there. Everybody else joined in. I mean, silver joined in, copper joined in. But gold held up a little bit longer. And we'll see what the weekly does. See how it tries to change. Let's see what it looks like over here. Let's see what... Okay, so there it is right there. And then, so that is the South African rand. And then last but not least, we go to the south of our border here in the United States, and that is Mexico. And we'll look at the Mexican peso. And there is the peso right there. And you can see it's lifting up a little bit here today. Let's see what it's doing. I mean, you can see this jagged edged move on the upside there. Ballard's just coming out with a statement. Fed needs to raise rates at least another full point. So what did it do? That's something. It's 150, 150. It's 3. So they're at 375 now. So the Fed's at 375, and he thinks that they need to get 475. Okay, so it could be like half, quarter. That's what they're thinking. So Ballard's trying to calm down everybody about this, like, don't worry, be happy thing. We're not going to be so aggressive. He's making it very clear that he's thinking another percentage point. And let's see, what is that? Let's put the Mexican peso up on Chicago Quant, and that'll finish off our currencies unless someone wants to see something. And I'm looking at the nickname again. I think that's so good, Sam. I mean, Metho. Sam Bankrupt Fried. It's almost like a poem, Yeah, you see the same thing. We're lifting up here, and we've had that notice we've had that same jagged stuff going on right here. Not as smooth. We've had lots of short-term jagged action over here, just like we're having on J4X. And we're still in that weekly with no problem. Pressure on, heading south. And now it's trying to get back into the daily buy, which is interesting. We'll see what they do. And there's the bottom end of the range, and that's what we did. I guess yesterday we went and we looked at, the Trump years. Here were the Trump years. Whoa, there it is. There were the Trump years, and you can see how it liked to stay down. And then this is the non-Trump years. That's the election. And Mexico thought, oh no, Joe Biden president? Are you kidding me? Oh no, that was COVID. And it stayed up in that range. That's what it's done with Joe Biden in there. It stayed up above the top of this range. So we'll see. The father of Sam's girlfriend. Wait a minute. The father of Sam's girlfriend was the chief of Gensler. Is that when? I think Gensler was CFTC also at the same time. So, there, I kind of remember that, but I didn't really think about it. Let's look it up. I think Gensler was head of the CFTC, and that's what they were negotiating right now with. That's why he's putting all that money into the Democrat Party to get those connections. let's do that. Gensler Chief. Let's see. Let's do this. Oh wow. Yeah, it's gonna be fun, in the sense of seeing all the information. Let me just go look it up. I could have sworn he was head of the CFTC at one time. Back years ago, during. Let's try that. Gensler CFTC. Yeah, he was the commissioner during the Obama years. 2009, served as chairman of the Commodities Futures Trading Commission from 2009 to 2014. So, yeah, I mean, I guess that's why he had a meeting with him, and I guess Gensler was supportive, which makes sense. It probably fits Gensler's MIT lecture series about cryptos. The idea was to reinforce the wallet, I guess, make it like Coinbase, and and that Coinbase got beat up pretty hard also. Yeah, Coinbase got beat up awful hard. Alameda. Let's see, what's his girlfriend was the FTX fund manager. Alameda. I like that. Yeah, well, Alameda is doing their best to hide it all, I'd imagine. Like usual. I mean, they don't like emphasizing bad things on that side of the political spectrum, so. Let's see. So then, let's see, where are we at now? So we were looking at Mexican peso. We're done there. And there's the short-term cryptos. I mean, not cryptos. We could put a crypto in there. You can see it right there. Red and green, and it's lifting up. See the line moving, and everything's positive. You see it here, red and green. Money, money, money. Make the money, make the money. See what's making the money. Same thing here, red and green. You buy it there. Obviously, it goes higher more than it goes lower. Makes the money there. That's what Chicago Quant does. It's a very, very good, accurate system. It's been very good to me. It's very, very, very good to me. So, all right, now, let's see, where are we at? We have about 8 or 9 minutes, or 7, 8 minutes. So my shorts are green. Your shorts are green? You mean you're making money in your shorts? That's good. Or are you wearing green shorts? Let's see. I guess let's jump over to the commodities. What's there? There's gold. Dow is falling. Yep. Let's see what the Dow looks like. There's my weekly chart, daily chart. It's been in a daily sell for 3 days now, right there. We will do that. We'll put the line in there. So yeah, that makes sense to me. It's been in a daily sell now for 3 days. Pressured on. Still in a weekly buy, so we'll see how far they push it down. Maybe they'll bring it down to 32,000, what's that, 500 down in here somewhere? Maybe they'll push it down that much. It really hasn't, I mean, ever since we went into the weekly buy down here in the 30,000 area, it hasn't really done much of a, every time it got into the correction, even then it was, looking okay, It looked okay. Is there a red dot in there, I wonder? Why don't we make those red dots a little bit bigger? Maybe it'll, it's trying to do the line. Let's try making it a little bit bigger, see if there's more of a red dot. I guess not. So there was no red dots for that? I can't tell. The green lines were hiding it. Let me move the green line out of the way. Not there. There's a green dot. Was there a red dot underneath that? Yes, there was. Look at that. A volatility signal right there. This is my old math that I've been doing since 82 with the dots. Might have to... I don't want to move that. No, I don't want to move that. I want to move this. So I think what I'll do is I'll move it up so you can see it like that. There you are. That makes more sense. I move it down like that. There we go. So what we do is make it lower. See, I use it to create the lines. The lines come off of it. That's part of the trick of that, is it shows the inside and outside days. So cool, cool, and cool. There we go. And that's the old chart. I closed the shorts at 30,000. You're going to close the shorts, or you were short and now, or you're trying to trade down to 30,000? You're thinking. I don't know how much they're going to push on it. You know, let's put it this way though. You're not that far off of the hedge, some of the smart people that I trust when I listen to people. I rarely listen to trade from people that I trust, but because it has to match my math, because the math is number one. But there is a lot of talk that there's going to be, a first and second quarter recession. They don't call it recession. Biden won't call it a recession anyway. But they're going to be minus quarters. So in other words, the GDP is going to be minus again. It's minus for the last 7 months or 8 months or something like that. And now this quarter seems to be picking. November and December seem to be picking up. And looks like it might be in the plus by like a half a percentage point. The yield curve on the bonds or the current or the stocks. The dividends have been paying okay, but they think that earnings could drop, and earnings are the mother's milk of stocks. So that is the strong point right there. That is the mother's milk of stocks. For them to go up or down. So yeah, I see that right there, and then I think I'm gonna have to come up with like a new way, because I realize now that these things are hiding my red and green dots. Let me just double check this. Oh, that's interesting. The inputs are in backwards too. Okay. And there it is right there. Let me just double check that again. There we go. So yeah, it's hiding some of the red and green dot action, and that's not good. I have to come up with a new way, like that one there. I guess I have to make it visible on some level instead, like hollow. Make it hollow. That's what I need to do. Make these things hollow, wherever I can. And cancel. Let's try one more time. Like right. Is that it right there? Yeah, that's it right there. So we go like that, and style. Let's move this off the screen. Can we make it a hollow thing? Maybe I have to do it like this. Or better yet, maybe it has to go like that. No, that didn't seem to work. It doesn't. No, that's not doing it. It's turning it into a dot. I don't need it to turn it into a dot. All right, we'll have to work on that. Anyhow, where are we at now? Oh, what's that? Bonds. Yeah, yield curves look bad. Bonds. Okay, inverse. Yeah. Well, here. This caught my eye. This is catching my eye. I'm a little confused by it. the yield. Let's go over here. The yield on here's the 30-year. It's been gaining. Now today they are pushing it down. We're seeing some minus pressure on it. And the yield, let me see where the yield is. But I would just guess it's got to be like 4%. Now we're at 375 officially right now. So let's see. Let me go here and find what is the yield this moment in bonds. So the 30-year is yielding 388, and the 20-year is yielding 410. I don't get that. Yeah, it's all whacked, isn't it? And then 10-year is yielding 37. So yeah, and then of course the 3-month is yielding. See, the shorter terms make more sense because they're talking between another 75 to 100 up, and then they seem to think they may stop. So, the shorter term 3 to 6 month is trading between 4.25 now and 4.6, and the 1 year is trading at almost 4.7, it's 4.65, and then the 2 year is trading at 4.4. So yeah, I mean that is definitely inversed, and they got the 1 month is yielding almost the same as the 10-year. So yeah, it's kind of sloppy. I agree with you. It's definitely putting things in the wrong picture. All right, traders. I guess we'll get out of here. What should we call it today? Should we call it something about what did Metho say there? Yield curves look bad. Let's use that. I like that. Because it is, the yield curve is looking wacko, Or was it yield? How about this? Because we did a lot of talking about cryptos. So I think we should say something about the cryptos, too, in the title. So how about if we go like cryptos and yield curves look bad. How about that? I like that. That sounds good. All right. So this is Doc from North America. Tomorrow is TGIF. We'll catch you all tomorrow, same time, same channel. So you're barely talked about them. What about just the yield curves? What, cryptos? I talked about cryptos for 20 minutes. Or 15 minutes at the beginning, didn't I? Or was I just I might have been hallucinating that too. Let me think. What did I start off complaining about? I was complaining about something. Oh, the way federal money had slid into FTX. I think there's 15, 20 minutes of yield of cryptos. How about that? How about if we go? Let's use Methos. I like that. Yield curves. That's better. I agree. Yield curves look bad. How's that sound? Yeah, that's one of the freaky things. Yeah, go with that. Federal money spent on FTX. That's coming out really loud and clear. So you're not going to see it in the New York Times, or you're not going to see it in the Financial Times, but it's you're going to. Matter of fact, there's going to be the Republicans announced investigations this morning, and that even the Democrats are saying they're going to bring them up on the Hill next month. So they're actually going to make them testify. But yeah, there's Ukraine money that was designated for Ukraine. Somehow or another bought FTX. And it wasn't done through Ukraine. It was done through, or it was done by influence here in the States. That's what they said. So, yeah, it's something weird. Yeah, federal money spent on FTX sounds good, Giannis. I'll put that over. Just say yes, good title, and this way you'll just use that. But no doubt about it. Metho is right about the idea of. The yield curve is all whacked. Maybe we'll take a deeper look into that tomorrow. Again, it's not that complicated. We've got Fed presidents and governors basically saying, let's bring it down to a half in December, and then maybe a quarter in February and a quarter in March or something like that. So yeah, I like the that title. I'm gonna just put that across the line. Is good. There we go. I like that. Federal money spent on FTX. Yeah. Spent with a T. Exactly. All right. This is Doc from North America. We'll catch everybody same time, same channel tomorrow. Happy trails to you until we meet again. Happy trails to you, to all our Dukascopy friends. Later, later, traders.